Welcome to Bears in Exile. Today is May 18th, and we're going to look at UUP and FXE. Now, we did have a nice strong move in the market today. The market, of course, being completely dominated by the currencies, and the talking heads on TV saying, and a lot of bloggers and everything are always saying, the dollar needs to go down, the dollar's done. Expecting that the dollar is going to go down and the euro is going to go up. So tonight we're going to examine what the charts say about that, and if we can find any clues as to corroborate that evidence. Now, we are in a NDE or news-driven event heavy time right now, so NDEs trump all charts. It's as simple as that. And here we are with UUP representing the dollar, and we did have the run in the dollar, and of course the market went down appropriately. It did not have complete separation prior to entering the bar, thus it was not expected to put the hurt on the bar. It did do pretty good regardless. There's all kinds of wobble here and everything, but it did not get all the way through the bar. And we have a couple candles peeking out, but that isn't coming out the other side. So that worked so well so far, and we can see that the fastest moving average, it does have a slight down angle to it, very, very slight. You have to really blow it up to see the angle. It's very minor. And if the chart is a regular scale, it looks like a flat line. So, by the book, I guess you could give it a target, which would be around 2147 or so. But I just don't know if that actually is a good target because of the angle of this. Beyond that, we do have some strong separation still on the short-term moving average, signifying that it still has some speculation and momentum left in it. And the long-term moving averages are getting damaged. The longer the averages are connected, the more damage is done. If we have another side day tomorrow, or even a little bit down or a little bit up, we should see some significant damage really start taking its toll on the long-term moving averages, weakening the bearish case on the dollar. And the secondaries, the MACD still has a great deal of separation between it and its trigger point. Is it going to roll over and head south? Well, the histogram certainly is starting to. And everything else is high, but it is still pointed up, and there's still a great deal of separation. So there is the potential for it to continue on its merry way on the daily. I'm going to go down to the 15-minute, and it was headed down as of yesterday. We did have a crossover long-term moving average. It did try to get back to where it was, and it got sucked back down into it. But really, we almost have a double flat line on the 15-minute, and that means that it can swing real violently in either direction. It only needs a few more bars and at the current level, and it will be a double flat line. All the secondaries have room to move. On the 30-minute, we do have a double flat line, so that is something to think about, be aware of. All the secondaries have lots of room to move. And on the 60-minute, this is the most interesting one. We actually have bullish long-term moving averages that are very strong. And we went into a flat line to sit on the bar, and the bar really hasn't been damaged that much yet, and we have all kinds of room to move on the upside. And so on the second most important time period, the dollar is looking very bullish. So that is, not in accordance to what they're saying on TV, not what the talking heads are saying. Um, so, and you can see that it did go and dip into it today, and it got pushed right back out. So that is something really to consider. 60-minute time frame on UUP is definitely has a bullish edge to it. If we did have a tick up, the long-term moving averages will be damaged pretty good, and certainly will make the markets take a dip. After the strong move today, that wouldn't be too surprising to me, but we shall have to see for tomorrow, because we just don't know. At a crossroads, really. And then FXE representing the euro. And, everyone, the common school of thought is, oh, the euro has to go up. It's the euro. It's not the dollar, so it should be strong. Well, today's candle is a I guess you could say that that's a ugly inverse hammer. Certainly isn't pretty. Not like this one over here. But we do have great separation, extended separation on the short-term moving averages. It's obviously bubbly here, and we have this like this wimpy rising floating moving average. Could you classify that as an uptick? Well, sure. In which case we have a target of 143 essentially on the dot, and in case could be made that for that today, in which case the target would be just shy of 143. And the MACD histogram is ticking up. MACD is still pointed down, and the other secondaries also are very low. So you could say, okay, this thing needs to go up. We still have the long-term moving average just bullish. They have taken some damage, but let's look at a different time period and see what it has to say. On the 60-minute, we can see that we still have long-term bearish, long-term bearish moving averages. And we'll notice that every uptick, every healing point has been fixed. All of them. There isn't a single one that didn't meet its fixing target for a bubble. And right here, it went into the bar, did not have full separation prior to going into the bar. It did form a bubble, did have a downtick. Downtick met its target price for fixing a bubble. This is fixed, and is now pointed up to sideways. So we still have great separation on the long-term moving averages, which would give weight to it not biting so deep. So now we have a mixed message, and we have two of the secondaries are mostly high, not as high as they could be, and then the MACD is pointed up, but the histogram is pointing down. So that would give us evidence that this penetration into the bar on the 60-minute is not doing so well, and could be rejected and head back down. And so everyone's saying that it needs to go up. The 60-minute is saying not so fast. So that is something to think about as well. And on the 30-minute, we can see that we have a flat line, almost a perfect double flat line. If it ticks down a little bit, we will have a double flat line on the 30-minute. And the 15-minute, I'm sure, is bullish. Yeah, this one's almost too fast to use to trade, but at least it's not as bad as the 5-minute. So on the 15-minute, we do have a flat line sitting on the bar, but 60-minute is definitely bearish slanted, and the daily is saying that it should have some sort of a bounce, possibly. This is not the greatest angle, but it certainly isn't as bad as the dollar. So I guess we should be thankful for that. But overall, I would say that it is not anywhere near as cut and dry as many people are making it out to be about the dollar and the euro at this point in time. So just be cognizant of of this data, and certainly news is going to color this. But if there's bad news on the euro, it is in a position where it could fall, definitely. And with the and conversely, with the dollar, it is in a point where if there's news for a stronger dollar, certainly it's in a position to break out as well. So if it was down here and there was news, it'd have to get all the way up here, contend with the bar, and have that kind of resistance. It's already worked through most of it. So just keep that in mind. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.